Tom, wonderful to have you with us again. Usually in these videos, we ask you to come in and talk about the economy and economic issues. Today, we want to get you to weigh in on an area of government policy that has really important implications for the economy, and that's in the area of climate change. It was a big issue before. It's gotten even bigger in the last couple of months since the election.
Yeah, it certainly has. It's a pleasure to be with you, Arthur, and I look forward to talking about it.
Let's bring up a visual here just to set the context. This is a headline from the Washington Post that ran recently about the incoming Secretary of Agriculture, Tom Vilsack, and he was talking about his priorities for the incoming administration. How much emphasis do you expect there to be on climate change over the next 4 years in Washington?
I expect us to be talking about climate change as we relate to our stakeholders in Washington, D.C., in basically every conversation that we have with them for the next several years. There's no question that it's not just that the Department of Agriculture, it's a very high priority, as they have said repeatedly. That is consistent with the priorities not just of the new team in the White House and the new president. It's also the priorities in the House and Senate side. And in the Senate side, obviously, the majority control has changed. So I expect that this is going to be a conversation we're having all the time.
It's not just government that cares about this. If we go to the next visual here, it's also the investment community. What's shown here is Larry Fink, who's the CEO of BlackRock. It's the world's largest asset manager. He publishes an annual letter to CEOs. The 2021 version of that's just out. In the letter, he says there is no company whose business model won't be profoundly affected by the transition to a net zero economy. Companies that are not quickly preparing themselves will see their businesses and their valuations suffer. Question to you, do you agree with that statement? And if so, what are the implications for executive teams and for boards?
Well, I broadly agree with that statement. I could quibble with a word or two here or there, but it's very clear that we're in a period of accelerating and rapid change, technological change, business change, which is changing the way the economy is organized and constructed. I think in 25 or 50 years, we'll look back on this and we'll say, yeah, that was a pivotal time where a lot of change happened in a very short pace of time and put us on a different trajectory. Some of the attributes of that trajectory in terms of our energy intensity of our economic production or other, for example, greenhouse gas emitting types of activity per unit of output in the economy started to meaningfully transform. And I don't want people to misunderstand what I'm saying. There will be some of that is incentivized and nudged along by government policy, but most of this is going to be the result of a competitive market economy where market forces and technological change allow for this change to occur in a very beneficial way, where new activity comes along, where we can be more efficient and per unit of whatever it is that we're producing, and that the greenhouse gas emitting attributes of the economy will slow down dramatically. At least that's my hypothesis.
So the investor interest in this area, you think, is sincere. It's not just being driven by a reaction to what's happening on the policy side.
Oh, I think it's absolutely sincere. If you look at set aside the recent national elections and so forth, and you look at the volume of dollars going into ESG earmarked investing, it's been growing from zero a decade ago to a very large number in the tens of billions today, and it's growing at an accelerating rate.
Let's pivot to the rural economy. We'll bring up a chart here. The challenge for rural America, which is what we care about at CoBank, is that the rural economy has kind of a uniquely high level of exposure to environmentally intensive industries. This chart shows data that's tracked by the EPA. They assign kind of greenhouse gas emission values to different sectors of the economy. Agriculture is a big one, so's energy extraction, so's manufacturing. These are all really big contributors to rural GDP. How do rural industries avoid kind of getting crosswise both with regulators and policymakers on one hand and that really important investment community as well?
Well, there are multiple vectors of pressure, right? One of them is investors and capital providers, the other politicians, regulators, and the rest of it. You can get crosswise with either of those or both of those and survive. The thing you cannot get crosswise is your own market for your own industry and your own business, right? Because the market economy that we have is a process of creative destruction. There are many businesses and industries that exist today that didn't exist when I graduated from college. There are many big names that were big 50 years ago or 75 years ago. They don't exist today, right? That process is constantly going on. So because of the acceleration of technological change and innovation that I described, the most important thing for every business person to pay attention to is where is my market today and where is it going? And how am I going to make sure that in the future I'm in the top quartile of my industry, not in the bottom quartile of my industry? How am I going to be a winner as this process of change unfolds? For those of you who are hockey fans, you remember Wayne Gretzky's statement back in the day, I don't go where the puck is, I go where the puck is going to be. That's what you got to do with your business.
How you frame this issue of climate change really matters, and we'll go to the next chart here to illustrate this. The bottom line shows greenhouse gas emissions attributable to agriculture over a 30-year time frame with 1990 as the baseline year. And if you look at that line, you can see they're up about 10% over that time period. The green line shows total output for U.S. agriculture over the same time. And it's up 45%. So the question here is this a good news story or is this a bad news story? And how do you frame it the right way?
Well, I'm a firm believer that this is a good news story. Over this period of time on this chart, we've added several billion more people to the planet. Those people need to be fed and not starve. How have they been fed? Significantly by the productivity increases in agriculture in the United States and in our principal competitors around the world. And this is the definition of the miraculous successes of a market economy. What a market economy can do when it operates properly and efficiently is produce more and more stuff with less and less inputs.
Go to the next chart, and it shows a similar picture here. This is for energy-related emissions. You can see on the bottom, they've actually stayed almost flat over this 30-year time horizon that we've been talking about, while the size of the U.S. economy has doubled. This is a very good news story, is it not?
This is a fantastic news story by any measure, right? The economy grows and grows and grows over long periods of time, and we use less and less energy inputs per unit of GDP that we produce. And in the future, if you roll this forward, I think technological and business change backed up by incentives from public policy and the ability to scale up over the coming period batteries to match up with renewables, we'll probably see that trend not only continue but accelerate. And the result of that will be an even better story in the future than the quite good story we've had in recent years.
Final question. We've seen in recent months a lot of industry-generated initiatives focused on climate change and then carbon reduction in particular. The dairy industry has declared that it will be carbon neutral by 2050. Land O'Lakes, which is one of our big customers, just announced a new initiative that enables farmers to generate carbon credits, and Microsoft is signed on as a big early customer. Do you expect those type of industry-driven things from rural industries to continue?
I absolutely do. I often joke to people, if you're not cooking dinner, you are dinner, right? So if you sit around, whatever industry you happen to be, set aside agriculture or the rural economy where we operate, and think of any other industry. If you're sitting around waiting for the future or waiting for the government to tell you what they think you ought to do, they're going to deliver it in a form that you don't find particularly attractive, very likely. You're far better off to be thoughtful in advance, proactive in advance, and try and figure out how to turn challenges into opportunities yourself. You got to try and be part of the solution, not part of the problem.